start addressing all your personal finance queries. Harshvardhan Roongta is our expert for the day, and we've got the first caller. It's Keyur Rawal, who calls in from Ahmedabad. Hi, Keyur.
Hello. Hi.
Hi.
I'm calling from Ahmedabad, and I have investment in mutual fund through SIP.
Okay.
There is a 5 different sector like the Fidelity Tax Advantage, Reliance Equity Fund RPG, Reliance Gold Saving Fund, and Reliance Vision Fund. Is it okay for long-term investment?
How much do you invest per month? Because it's via SIPs in all of these. And apart from that, could you also tell us a little more about your insurance, and do you want to put in some more money?
Pardon?
Can you tell us how much do you invest in these SIPs and what your goal and time frame is?
Per month, 100 rupees, 1,000 rupees per month for each SIP.
Okay.
And gold saving fund 2,000 rupees. And terms is 15 years.
Okay. Harsh, what's the advice that you would give him? Are these good investments that he's already made, or you would recommend a change?
Well, Keyur, the investments that you've made currently, they are into well-performing funds, but there is some kind of duplication that I see in the objective of the funds that you have. Like for instance, I see that you have investments into Reliance Vision Fund. You have, Reliance Equity, SBI Magnum Global. I could advise you to just shortlist amongst these funds, and I'm recommending 3 funds which you can retain out of all that you have. One is surely Reliance Vision, is you can keep investing into the same. The other one would be SBI Magnum Global, and the third is the Fidelity Tax Advantage. Now, any investments, all the SIPs that you're making, I think you should just sort them out and invest only into these 3 funds. Anything going further also you wish to invest, just break it up into these 3 funds. Take a call on the tax advantage fund that you have after DTC comes into play, because there may not be tax advantages given to ELSS schemes. So going further, I think keep it simple, keep these 3 schemes and invest all your SIPs equally amongst these 3 schemes. That will be better for you.
All right, Keyur, thanks a lot for calling us. We have now someone calling from down south in Coimbatore. Ravi Varman is calling. Go ahead, Mr. Ravi Varman. What is your question?
Yeah, I am doing SAP in Reliance Growth Fund and HDFC Top 200 there. At present, the Reliance Growth Fund is not performing well. The fund value is low, not going up. Whether I can continue investing in Reliance Growth, or I can choose it to some other fund.
Do you don't have any doubts over your other investments? Templeton India Equity, SBI Magnum, Reliance Diversified?
Yeah, the Reliance Diversified I have stopped. It is having what performance. I don't think I have interest to invest further. Okay. I am continuing investment in HDFC Top 200. It is okay for me. Okay. Whether I am having only doubt in Reliance Growth, whether I can continue investing to it.
Okay, and you're ready to put 5,000 rupees per month for 10 years, including the funds you already have, correct?
Yeah.
All right, go ahead.
You please select the 2 or 3 funds which I am at present doing SAP. I recommend any other fund which is a better option.
Fair enough. Harsh, you may have got that note. His waiting period is 10 years and his goal is 10 lakhs.
Lata, the good part is that he understands that there are some funds which are not performing and he needs to trim them down. And with an objective, with an investment of 5,000 per month over a period of 10 years, 10 lakhs seems to be reasonably achievable if you see the long-term equity returns of about 14%. So if you're assuming that, he will just probably exceed his 10 lakhs target to about 12 lakhs of rupees. Now, in his portfolio again, I'm going to recommend 4 schemes which he can stick to, which will give him diversification across different capitalization and market types. So he can just make a note. One is obviously HDFC Top 200 he can retain. He can retain the Templeton India Equity Fund. He can retain the SBI Magnum Global. Now this is out of his existing portfolio, and he has a concern on Reliance Growth, which is fair enough, and I have already excluded that out of the list, which he can retain. In addition to that, as I've always mentioned that I'm a strong advocate of an index fund to be a part of the portfolio. So I'm adding one more fund into his portfolio out of the 3 which I've apart from the 3 which I've already recommended, which is the Franklin India Index Fund BSE Sensex plan. Now these are the 4 funds that he will hold in his portfolio. Whatever investments that he wishes to make, he's already currently making some SIPs and he wants to make an additional 5,000 rupees. So he can club all of that and divide equally between these 4 funds. Now if he does that, he will, as I mentioned, have a very balanced portfolio, and he will be exposed to different objectives of the market. So that's what I would recommend for him. He needs to, yes, review his portfolio after 2 years from now, because it has a little bit of volatility included.
Yeah, that he apparently is doing, has a keen eye on the NAV. Well, that's the advice for you, Mr. Ravi Varman. And Harsh, thank you very much for taking our viewers through their personal finance questions.